The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Very important session, and we'll get right to it. We're looking at, well, let me just first show this. Here's the Chapman Wave methodology in a nutshell. Try to identify the lowest, most important left side low bar. Merely count each successively higher peak. You want to go 4 peaks high. You alphabetize them, uppercase on the way up, lowercase on the way down. And when you get to the 4th highest peak, other things can happen. That's how the core, trying to make it as simple as possible, makes no difference whether you're trading a 2-minute chart or a 20-year chart. The waveform will not change. The assessment and the analysis is, of course, very important. All right, let's get out of that. What did we have? We had a peak D in the E-mini. This is, did I put the March one up? I put the March one. Let me see if I can just change this. ESM 8. Oh, that's right. ESM is June. So June made a peak D top, February the 27th, I believe, 29th at 28.83, plummets down to the 2,532 level on the 6th of February, bounces, comes back, retests, and then spirals up to the peak D again because of today's low bar. But that's below yesterday's 2807.23 high, 0.25 high, and the MACD is turning down, but still very good. Stochastic is at 82%, above 80% is good. The unbalanced volume is spiraling down. You've got to be very careful. We're sitting on the 9-period exponential moving average at 27.51, down 21.25. If the trend line support breaks, simple trend lines, just draw a trend line. In this case, it's an up channel because of the 2 dashed lines. Yes, I did not take the low. Why would I take the low? I want to get the matching with as many hit upper candle wicks as possible to the downside. And in this case, it means that I have to go to the body of the candle, but it's very simple. It says at 27.14 over the next 2 weeks, going to be absolutely, I'd say, is going to be absolutely imperative to hold. Why? Because there's the pattern in the Chapman Wave methodology that I talk about so often called the H, lowercase h, or arch pattern, and that will intimate strongly that if there's a close below this trend line, the next level of support will be the low of the 7th of March at 26.86, and we can go on like that. So, very important. A positive bias says within a couple of days, you just suddenly get an incredible turnaround. Next thing you know, you're trading the 28.15 to 28.20 area. That would be very positive. So now we can go to the Dow, INDU. The Dow trading down 300 points at 24,703. I spoke about it yesterday. I said we made a peak D, Chapman Wave peak D, on the 26th of January at 26,616. Chapman Wave 2-bar reversals, the technique that I use, go down to the 9th of February at 23,360, over 3,000 points. Rally sharply to 25,800. That turns out to be 78%, 76% rally. And then what happens is we start a green dash trend line resistance, a sharp break above it, turns that green line into support. It's very positive. That's why I make it green and not red. But here the red one says if we take out the low that we're testing right now, if we go below 24,650 today, we've broken this trend line support. The MACD is probably going to turn negative. It has already actually crossed negative. It's already negative, but it hasn't crossed negative officially yet. I have to wait for the end of the day. And the stochastic's reversing back down to 55% with the on-balance volume. The weekly chart has that H pattern we spoke about. What is the H pattern? Let me just do this real quickly. In the Chapman Wave methodology CD book, introducing the Chapman Wave methodology, you go to the chapter called The Dreaded H. That's chapter 17 right there. And we scroll down. What do we see? We see a sharp move down and then an arch formation that attempts to rally, takes out the left side low, does it again, does it again. Sometimes it can be even a bigger arch, could even land up making a lowercase m. The lowercase h can go to a lowercase m. So now let's get out of that, show you something that's happening here. There's the lowercase h, but it's got a little mini m right there. So this is going to be very important because the weekly has the arch formation. 120-minute chart made a peak C1, C2 at the 200-period moving average and reversing down sharply. I didn't show you this. I should have. Yesterday, I had a question in the den. Where did I type that? Would I show the M18? Would I show the 120-minute chart and would I show the daily chart in a particular configuration? Well, the E-mini, I had said, went to a peak G/C after a Chapman wave instant restart, and I spent years trying to figure out why I would get to a peak C, it would fail. That's how I learned to count to a G. It had to go to those extra 3 letters. Never goes higher than a G. And because it never goes higher than a G, when it did break the G, and usually it did it in a cup formation, took a little time, and then finally, and it took a lot of time, and then finally it did it, and then it failed. And yeah, I used to think, well, this would be an A, call it a gray A. That would be a B because it's a brand new B after a sharp decline in the technicals. No, this is like a right arm extension or a Chapman wave rogue wave. It goes there, breaks to a new high just in time for the people who were short to say, oh man, I got to cover, and they cover, and the people who were long and got out because it was pulling back say, I knew I should never have got out, and they get right back in, and then within that same bar, it starts to go down, and then the next bar is very ugly, and that's exactly what we got. That's what I call the Chapman wave. This is a double top or a drop bucket pattern because it looks like a backhoe filling up the drop bucket and then dropping the price. Here we are. So the next level is 27.43 with 200-period exponential moving average support. If I was to give it a time, probably I'd have to say by this evening or tomorrow morning, first thing, it should be testing 27.43 if it doesn't do it before. Okay, get out of this. We've got a lot to do. I wanted to show you a couple of other things. So now let's go back to the Dow. INDU. So the question I had was, what techniques were you using to short the Dow right at the top of that bounce 3 days ago? I was looking at this trend line resistance. I was looking at the MACD being very weak on this bounce. I was looking at the stochastic way below 80% in the 40s at the time. So a lot of it said everything I'm looking at with the different stocks that I'm looking at, Boeing, UTX, etc., said that there's a real good chance that we won't go much higher, and you can just put in a tight stop. So now let's go to the S&P SPX. The S&P is right on the 9-period exponential moving average, down 17 at 27.48. This has got a peak D. What are we looking at here? I can only put a plus sign because it hasn't crossed negative. Look, the MACD is still pretty good. Stochastics at 83, also 83%. Also pretty good. So I'm giving you parameters. A close at any point in the next 2 days below 27.37, between 38 and 36. If it closes under that, I would have to put a down arrow here and say, yep, that's definitely a peak D, at least a short-term sell signal. Oh, we're running out of time. It's going to be one of those days. I've got a lot to do. I'll take questions a little later. Right now, I want to finish this preamble, and then we can get to the questions. I'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yes, so we're back and we're looking at Bitcoin. Bitcoin right here. Remember the arch formation I just discussed, Chapman Wave, that dreaded H pattern? So I discussed this some time ago. I said, look, first of all, back in over the long weekend, the January 1st weekend, long weekend, remember I came back and I said, oh my goodness, everywhere I went there were people talking about Bitcoin. I think that we've seen a major top in Bitcoin. And then a little later on that month of January, I said, I don't think I've heard anyone not mention the word, the numbers 40,000 and 50,000. Oh, we are going to 40,000. We are going to 50,000. Our projection is 40. And a lot of people with these youngsters, when I say youngsters, I mean these people that have never seen a bear market. They don't understand how markets work. When you have a bubble in something, it gets squashed to the extent that it takes time. It gets all those people that were long and are novices, it turns them bitter against the market or that particular market. And that's exactly what we're seeing. So when you look at GBTC, I just showed you Bitcoin, the arch formation, there it is as well. Peak D. What are we looking at? Peak D in the Bitcoin daily. This is the Bitcoin fund. And let me see. And I did make a peak F. Remember, in fact, was it this week or last week I was singing the song Buy at the Low and Sell at the High? The market goes up, the market goes down, supposed to buy at the low and sell at the high. But you know what we tend to do? We buy at the high and we sell at the low. Chapman Wave is what you need. You buy with a Stoke and the old MACD. That's the MACD. Follow the price and wait for a peak. Higher highs is what we seek. I'm not going to sing it. The wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light. But all you got to do is make your stops real tight. Suddenly it goes to E and F. A bell rings so loud it can make you deaf. So what you're going to do, which way to go? You buy at the high and you sell at the low. No, you sell at the high and you buy at the low. So that's Bitcoin. I think this is done for a while. I think it's getting closer in price to trying to form some kind of a base. But the upside, I think, for now is going to be limited. And all of a sudden, all the things that were so positive just flipping like a coin. All of a sudden, those very same things are negative. So now I'm going to go to Ben in Tallahassee. Ben, how are you? Hello, Ben. Whoops. Am I getting sound? Ben in Tallahassee.
Hello.
Maybe. Oh, there you are.
Hey.
Hi, Ben.
Hello. Hey, Basil. Sorry to break up the rock concert.
Not exactly.
So I got your Q's trade, which is outstanding. Great job on that.
Thank you.
And here's the question. So the way I understand the Chapman wave, going up, you can expect to go in F or a G, but going down, it's assessed different, right? So the
Yes.
troughs are assessed different than the peaks. Correct?
So let me just go
Because
right to that point.
There's other. Well, here's my ultimate question: is
Yes, please.
so when you now look at these reverse or these inverse ETFs, essentially you're looking at the core base ETF going down, but obviously the inverse going up, making peaks, and the base making troughs. So if you assess the base differently than peaks, when you do an inverse ETF, how can you evaluate the peaks when you don't evaluate the bases the same? Does that make sense?
No, it's a fantastic question. I've dealt with this question for decades because you would think that there's an absolute correlation. Now, this is going to be very interesting. If you look at the TBT, which made a peak D, this is the inverse of the T-bond 20-year fund. It hit 39.86 on the 21st of February. What letter was it? D. If you look at the TBT on the way down, where did I just type that? Did I type in the wrong place? TLT. Oh, TLT. It went to where? It went to a trough D on the way down at 116.51 on what date? The 21st of February. The TBT's high was on the 21st of February. So if you can get an exact mirror image, not all the ETFs do that, especially when you're talking about doubles and triples. They might miss by a penny, so you're going to get a trough that's in one and maybe not a trough in the other. But usually the one-to-one, like the DOG, one of the reasons on March the 6th of 2009, I was able to pick the bottom for subscribers, the exact day, the exact couple of hours of the low. And remember, the S&P made its low on the 9th over the weekend, so it was Friday for the Dow, and then 666 on the Monday for the S&P, was because the DOG was giving me this exact same peak D signal, and I thought, aha, all my indicators are suggesting there should be a low. I had a time price match. I had a whole bunch of things going, and all I needed was to get the DOG to give the same signal. So most of the time, if you're looking at the mirror image and it's a one-to-one, not a two-to-one, it does happen, but I prefer to say that the one-to-one isn't exact, but it can be really close. And when it lines up, that's really good. And I think I've answered your question, but I haven't answered your question to the nitty-gritty, which you haven't really, I think you've thought of, I'm not sure if you've articulated. And that would be, what are the characteristics on the way up that are different to the way down in the technical tools I use? And there is a difference. And what I found over the years, for instance, in the, you see the way the MACD made a kind of a double top just to coincide with the, it was a higher 9-period differential in the TBT back on the 14th of February at 39.23, and yet the actual top in price, not in the MACD, not in the stochastic, was a little later. And there was the divergence I was also looking for. I mentioned it to subscribers. I thought that the TLT was about to start a rally, but the rally needed to really get into the 120s to say, hey, this is now much more serious for the downside in the market. So we're in the TLT, just to kill two birds with one stone, we're now at 120.13. We were not there. We were only in the 118s yesterday. So I think that this is, in fact, starting to become a little more serious. But you know what I'm going to do? I hope I can do it this weekend for subscribers. I've been wanting to do this for a long time. I might even do a webinar sometime on it. But I'm going to at least show you that in these very sharp single-digit declines, if you look at, let's just go to the Dow weekly chart, the single leg A to the downside very often can produce a very powerful up move. Even when you're looking at the daily, which went to a trough C, when you get that kind of power, you don't always have to go to a D to get a very strong bounce. So I think I'll try to articulate the difference between the move up, catching a top, and on the way down, trying to catch a bottom. Over the coming week or two, I'll try to add it to my newsletter.
Well, I think the million-dollar question is, I can wait.
Hold on, we've got to
Platinum,
break. Hold on.
grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, we're back. Dow's down 264, S&P is down 13, and we're on with Ben. Ben, let me allow you to finish your question. Question away.
Yeah. So ultimately, when we assess, let's just say the cues, right?
Yep.
So you can either look, you play it going down. So you take a short position and you play the SQ QQ. So you can look at two different ways. You can look at the peaks of the triple inverse SQ QQ, or you can monitor the base going down. And when you look at the Chapman wave, what I'm assessing is that since you evaluate going down versus going up differently, to me, it seems like it's a lot more important assessing the cues, the base going down versus counting the peaks of the inverse going up. That's really the point.
Yes, correct. Except that the 1-to-1 does have a way better correlation than, say, the double or triples. Let me also say to you that the reason why I've found over the years that it's the peak D and onwards where I start to look at what can happen, can it recycle, etc., is because of the manner in which the MACD and the stochastic are calibrated. And on the way down, you see the sharp move that we had from the peak E top in the QQQs, the Power Shares QQQ Trust Series. There was a peak E at 170.95. It was a 2-bar reversal on the 26th and 27th. And then what happens is it comes down really sharply. It goes trough A and then a huge leg B, lowercase b, then a big bounce, and then a 1-to-1 relationship to the 150.13 low of the ninth. Goes to a leg C. That was an 18% correction. The speed with which we came back and made a new all-time high, that is, I wouldn't say it's remarkable. Yes, it's been done before, but mostly it's been done with stocks, not necessarily that I can look at with indices. And that's why this is possibly just the start of a move. I might have to redo this whole thing again because how we rotate, I'm really pleased that the VIX is not skyrocketing to the 19s. It's only in the 16s. That says there's some disbelief. I'm happy that the short-term trading index is still under one. It's at 8.89. There's a lot of disbelief here that we can go down deeper. I prefer that. But the MACD and the daily is still very good. And the stochastics at 88%. I'm saying this is going to need speed to the downside. And we need to see at 170.66 right now. We need to see the cues. I would put it no later than Tuesday with very minor bounces with closes with a red candle. That's the one I would have to see now to really go. You know that technically this is the first day of the peak because there hasn't been a new high after D. That's number one. And number two is I haven't officially got even a sell signal yet. It hasn't closed underneath the 9-period moving average. So what I tried to do is using all the techniques that I have, try to time it. We were within not even like 50 cents or something from the all-time high, got the short. But this is the strongest, one of the strongest sectors in the entire market. I don't think they're going to give up that easily. So we are very lucky that we have the room, having been so close to the all-time high. So I'm just playing it one by one. The 120-minute QQQs.
Over the next couple of days, if you want to do a little more of a technical deep dive, I'd love to understand a little bit better why you don't necessarily go down to the trough D's, E's, and F's going down, versus you typically like to see the peaks D's, E's, and F's going up. Is it right? Isn't that kind of a fair question?
Okay, so there's something else. So you're very well aware of my arch formation, the arch formation that has the left side, right side price time match. So I'm going to try to introduce that. Maybe this weekend I'll try to show that if it's just a normal move to the upside, no matter how big, and then a normal move to the downside, you will get your troughs going down. It's in this bear phase that you spiral to the downside. It's the Grand Canyon cliffs on the left. And that's really the difference. And you'll see how big the MACD is and the stochastic, how sharp. And that's where I learned, hey, don't wait for those Ds on the way down, because the motion on the way down is much deeper. But if it's just a normal, the saying always is you get the escalator up and the elevator down, whatever it is, meaning that you come down really sharply. No, you don't always come down very sharply. I mean, I can't do it right now because I've got other things going on, but I can show you not dozens, not even hundreds, but thousands of charts that have made the pattern that I talk about, that arch formation. And in chapter 13 of my CD, I've got it right here, and I'll show this is the arch formation. And you look, in this particular instance here, you've gone, this is slide 296 S&P way back in August of 2005. And that same arch
formation you don't see going the other way, right? Because it's a different psychology going up versus going down, I guess, more or less, right?
Right. And then on the way down, you could see all the way down to a D. If it's just this normal move up and the same number of bars on the way up to the number of bars on the way down. So that's the difference. The difference is in a bear phase, you could go down like a single leg A or a single leg A and then just a nominal little peak, a trough, and then boom, down again, and that's it. You're done. So you have to modulate your thinking to whatever specificity you're looking at in the chart. And in this particular instance, as I say, look, the QQQ is now up 23 cents at 171.94. I have to tell you, until IC closes below 170, I'm just saying this is the first attempt. Perfect timing, got nothing. The market has no idea that it was perfect timing. If it wants to go to an E, it'll do it.
Basil, thank you very much.
Thank you very much, Ben, for good question. I'm going to try to deal with it over the coming week.
Great, thank you.
Thank you. So, folks, this is what I wanted to show you. The IWM, so the QQQs just make it real clear, trading at 171.94 until I see at least two closes below 170, really 169.50. But in that area, I have to say this is just the starter position. Too many fund managers are just saying, hey, I've missed buying and name whatever it is in the NASDAQ. This dip is what I'm going to buy. And the MACD is still strong. Stochastic is holding beautifully at 89%. We'll see. This could be a top. It could be the top for at least the short term. I'm not making predictions here. I need to see the price go in the direction that we have taken our trade. So if you look at the IWM right now is trading down 41 cents at 158. It made a peak E. The MACD is strong. Stochastic's at 91%. Usually when you get tops from this level, like you did here on the 24th of January at 160.63 in the Russell 2000 iShares, you will see a slow decline and then boom, you go under the 9-period moving average, and that's it. We haven't even gotten close to 156.78, the 9-period moving average. So this is a start for the IWM to start a rollover, but it's a process, and you need bad news. So I'm not sure yet whether we're going to get that bad news. So that's the IWM. IWM breaking over 160.63 in the next week and a half would be really positive. Let's look at gold. Gold was down. Now it's down 2. It's just stuck. Gold is stuck. Dollar is stuck. You got some stuck instruments right here. I'll be right back. Down.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Making that H pattern. So let me just show you the pattern again. This is chapter 17, if I can get there in time. Yep, chapter 17. Remember the H pattern? Lowercase h, the left side breaks, it's a real problem. Sometimes it can happen way up. Do I have that? No, I don't have it from the way up area. Look, there it is. When you remember gold? You remember that pattern that we looked at in gold at GC way back in September of 2011? Let me show you. Yeah. Remember I said, yes, the H pattern, and I drew it in and don't have it here, I have to redo it. Oh, there it is. I moved it over. So the H pattern, that can go to an M pattern. So it can either be extremely bullish. If it's just an H pattern and it starts to break and then closes over the arch high, it says, whoa, watch out, I can go back to my old high. But if it fails, you've got to be careful. So now let me show you crude oil. Crude oil right now is trading at 60.61. It's down 10 cents. No big deal. But it keeps closing under the 9-period moving average. And that says, I'm trying to find support. I'm finding support. I can go sideways for a little longer. But boy, if I start trading in the 59.30 area, a point and a little bit below where I am right now, I've made that arch pattern. There's a good chance I'm going to retest the low 58 area right there. 57.90, I think it was. 57.90, yep, on the 9th of February. So that's why you've got to be careful. And the best case with this pattern is that you get another arch. It doesn't go anywhere, it just stays in the trading range. So I was asked about a driller. So driller. Give me a name of someone. Give me a name of a driller that you'd like to look at. While you do that, I'm going to show you high-grade copper. High-grade copper, nice spike today, up at 315, up 0.0919. But even most importantly, it's in this trading range. It successfully held that H pattern, hasn't gone to the 200-period moving of 304, but it is stuck. It is stuck in a range. If you look at RIG, which is Transocean, I believe. Yep, Transocean. How many times do I have to notate Transocean? Anyway, not going anywhere. Look, peak A, peak B, after a massive decline. Oops, peak C. It's got 10.23 resistance at the 200-period moving average, trading at 9.77. This is a pattern that says there has to be a major surprise, because I've just gone, the best case I've done is to go sideways. I couldn't even break down, but I couldn't break out. I'm in a rectangle formation or an arch formation. And that's what you got to keep in mind, that until RIG actually closes, and unfortunately that'll be leg C probably. If it closes in the 10.30s, that's good action, but then I'm prepared to start looking at it and saying, hey, you've shown me where your base is in the 9s, now let's see what you can do with the 11s if you're able to hold the 10s. So let's go one step at a time. So RIG is perhaps where's Schlumberger? Schlumberger is It's a service, right? SLB, yeah, look, same thing. DO is offshore diamond offshore drilling. Schlumberger, yep, I think that they more servicing. So yeah, it's the same. They all have the same pattern. Nothing to see yet. Okay, next question. So Bob sends an email saying, the one dilemma is, I believe, that technical analysis sort of relies on smooth weather as the waves develop. Disruptions such as today's White House tariff statements are a bit like one of Basil's rogue waves showing up out of nowhere, which is part of their definition. Bob has taken my courses, so he knows from whence he speaks. So what I would say is this is the definition in these oil drillers, the Schlumberger and what was I looking at, Rig and DO. If you're looking at this is in a pattern, and the pattern says sideways. You can go to the top and then short it, and at the bottom you buy it and just trade. Some people can make as much as a big move up, just trading, shorting and long, and going long, the trading band of a rectangle. I tend to try. I found that I lose the most money when I tend to do that, because I keep thinking, oh, it's going to break out. Doesn't break out, just comes back in. So I stay away from these. So yes, Bob, you're absolutely correct. But I believe that what we're looking at now is that there's a confluence of factors that are able to come together. We do have some kind of a story now, and we haven't had that before. So my contention is bear phases cease, and we haven't seen that yet. The futures open double-digit down. Dow is almost triple-digit down. There's a tremendous urge to rally intraday, and then it closes towards the low or at the low of the day, and it just repeats it 3 or 4 times a week, and it just keeps doing that. That's a bear phase. We're not. This is the first decent downturn we've had in the Qs. Let's see what happens. Look at the SMHs. SMHs right now down 26 cents. Big deal. 111.23. Made a peak D at 114.55 yesterday. NACD's good. Stochastics at 87%. Weekly chart has turned positive. I have to see the semis start to break 108 support, and then I'm going to say, aha, now we've got some time on our hands to the downside. So in a sense, Bob, you're right, but I also like to look at it as each individual stock or sector has its own characteristics, but within that you can get the sense of a bigger, like the XLK. Look, the XLK right now is up 4 cents at 69.94. Made a peak E with a silent doji 3 days ago, but it held the 9-period moving average. This is going to be the week that tells us a lot, because if the techs hold steady here and the Qs make a new recovery high by Wednesday, today's Wednesday, within a week, by next Wednesday, all I can say is we've got a sideways consolidation going through a rotational correction. I was asked about Boeing. I didn't really want to go to Boeing because I'm just too upset. We had Boeing as a short. It dropped huge. Then it came back. We got stopped out at break even at 353.01. And yesterday I said, getting ready to short. Well, I didn't have a chance. And no, 2 days ago, getting ready to short. And look at this. Every day has just been red candle, red candle, red candle. And what I wanted to do was to show the one-to-one. There's a particular technique that I developed years ago. It's called the Chapman wave parallel one-to-one extension. Whew. I hate it when you got that many words. But anyway, what is it? It means that you don't just get a one-to-one. You get it in the same speed and direction. Look at this. We've got an exact perfect Boeing one-to-one extension. Look, this angle, maybe, let me just do this. Style, make it solid. I'm just going to fill this in huge. Make it weight, make it big, make it blue. I think that's the color that shows the best. Yeah, look at this, blue. Okay? So what did I do? I said one-to-one, Chapman wave parallel, one-to-one extension, and look at that. And what's the low today? The low is, I'll make this transparent so you can see. The low is right there, right there. It's just fractions off the one-to-one. I love that technique. I missed it. I'm sorry, subscribers. We had it. I spoke about it, just didn't do it. Hate that. Human beings. A question about the Caterpillar. You know, this is very interesting. Caterpillar and Boeing are undergoing some stress here. Caterpillar was the first. It made a high of 173.24 with a Chapman wave 2-bar reversal. Very unusual. It made the cup formation. This is the same thing I showed you in the 120-minute chart of the E-mini with that peak G/C. They did go to their D, a nominal D. This went 173.24 on the 16th of January, then missed it by 14 cents on the 25th. But the technicals were already deteriorating horribly. Smashes to 142, that's 30 points, that's big. So that's what is about, that's about an 18% correction. Bounces strongly to the 165 area, pulls to 145, is trading at 152. I'll be back right after these messages.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So what we're looking at here is just to show once again, this is the daily chart of the Bitcoin. See that H pattern? We've just been talking about it. If this at 8391, if it takes out that left side low, that starts to accelerate that H pattern, and that's where you gotta watch for those key supports, because if it cannot hold the supports, it goes all the way to the left side. Now, one of the things that I've spoken about is just quickly check the questions. Could I look at the IYT? Yes, the IYT at this particular point is down at 192.61, down 1.7. Made a peak C. This is that H pattern that's trying for another H to make the lowercase m. I think that the transports are going to be a clue. If the transports start to pull back under 192, as the iShares, and by Tuesday of next week, if the IYT is trading under 189, closing under 189. That's just going to be saying, trading band, it's just stuck sideways. But if it's able, under these conditions, to suddenly spiral into the 197 area, it's a 192.60. That would be very positive. I don't know if it can do that. Our next question I had was, That was that. Oh, Sandra LYG. LYG. I know that stock. LYG. Lloyd's Banking. Okay. Lloyd's Banking. I'm not sure what the question is. Question quickly is, could I get your opinion on LYG? Thank you, Sandy. So, Sandy, this is what I'm looking at. When I see a trading band is getting narrower and narrower, and I see this, the majority of the price has been in a resistance line, and it's getting closer and closer to the support rather than breaking out. I say just be real careful. If you're in it at $3.80, I'd say it's very hard to have a stop in something so low price. But boy, if it goes under 370, if it closes under 370, I don't see anything there. If you're holding it and you're able to see it above 3.85 in the next 2 days, I'd say good. Just raise your stop. If it's me, I would step aside. I'd wait. There's the H pattern in the weekly chart. I'd just wait and say, hey, you might get a better, it's $3.79 right now. You might get a much better opportunity to buy at, if it retests the 373, 370 area. I just wait. I would be waiting on this LYG. Hope that helps you. Hey, folks, have a great day. Stay tuned for Steve Rhodes. What's today, Wednesday? Steve Rhodes, Dave White, and Tom O'Brien. I'll be back tomorrow. Check out my opening call. I think you'll enjoy it. Hopefully make money. I'll be back tomorrow.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.